everyone. How are you guys doing today? Hopefully you are having a great week so far. Today's Thursday already, so quite of a interesting week. We had very low volatility in a sense from from actual data releases point, but when we look to the volatility that being dragged in this whole week was basically because of the NFP from last week. So it's quite interesting to see that the market has been priced in a bit of a rejection in a sense, a very strong move, I would say, from the actual NFP from last week. So already a week after, we still feeling the effect of the NFP. All right, so that's pretty much what I've been looking and what I've been analyzing for the week, and it feels like that may continue because what happened was not only the NFP that was the star of the show, I would say. It was the actual price of the market price in a higher chance of the Federal Reserve cutting more and more after and after. So it was quite an interesting scenario. I will show that later on onto the CME FedWatch. But for those who have been following me for a while, you know that we've been quite looking at the CME FedWatch, and we've seen that the market was actually expecting no cuts. There was a time that was expecting no cuts for I would say September. Of course, July last month there was no cuts predicted, but after July, August, October, and December, they were only predicting 50 to 25 basis point, and I was believing on the lower side of the so it was on the 25. But it turns out that the out of nowhere that the market ended up being priced after the NFP. So basically that the labor market is cooling off. That gives more room for Federal Reserve to cut the interest rates, and now market believes that a 75 basis point will be incoming. So quite interesting how that is moving. Okay, cool. That being said, I also have prepared a few things because from the NFP, nothing else moved the market until tonight. That's when we're going to be having the Bank of England rate decision, and what should we expect from that? So I'm going to break down this topic into a few back releases that they had, and also what should we expect from them, because BOE have been one of the strongest cut profiles I've seen. They've done 5 cuts already, so 25, 25, 25, 25, 25, and 25. So that is 125 basis points, so 1.25% in total. And yes, it's quite aggressive, but it's not in a very short term. It has been pretty much for a whole year already. I would say it's like since 2024 to now. So it's been pretty long time. Anyways, so based on that, let's see how the market reacted to that perspective. It is a different time now, because we are seeing that the pound is being pretty strong. Besides, hence the reason why the NFP was the only one, because the market is feeling that the US dollar is very weak, so moving money out from there and moving money into other currencies like the pound, the euro, the Japanese yen, Australian dollar, New Zealand dollar. So with that in mind, after that, I'm going to just go through and should we long or short the pound, because the interesting point is we were very up-headed into, like we started the race in front of everybody already, because we already have some positions in place of the GBPUSD trade. as we placed that positions yesterday on the Wednesday webinar. So we've placed long positions on GBPUSD, and right now it's over already 80 pips in profit. And also the New Zealand against the US dollar is also in profit. So these are the basically true trades that got activated. Besides Aussie dollar, it didn't have anything. So Aussie against the US dollar, that is in profit. Sorry, New Zealand against the US dollar is in profit as well, but it's minus profit. So I think it's 13 pips. So it's not that big, or 16 pips, but still it's in profit. So that's great. But the biggest one is, of course, the GBPUSD. So we're just going to do like a recap of those trades from yesterday, and also if we should maintain those trades or if we should just change them. So let's get started. Let me take this off. Perfecto. Okay, so the BOE rate decision is tonight, and you can see that onto FinLogic's calendar. Just a second. So if you go into finlogics.com, or if you just go into your if you go into the comments over here, you will be able to see that there is the link I've sent that already in there. So if you go into tools and then go into economic calendar, just click over there. Your one most likely will be full. So it would be probably something like this. So you will probably see like all of the countries, all of the strength, all of the impact releases. What I like to do is I like to go here. I like to click on select all, and so in a sense we want to look on the BOE. So that's from UK, so United Kingdom. So just click on UK, and that's what UK has. And you can even tailor that even more down. So I don't want the low, I don't want the median. I was only going to want the high, but I will leave median and high because sometimes different economic indicators has different sort of rebalancing what is high and what is median. So in the case, just leave both of them, median and high, and that should be all of the actual important ones, as the low ones are always the same. Okay. So from here, we can see already that it's going to be at 9 p.m. Sydney time. That's remembering it's Sydney time. You have to find your time zone over here. And from there, we have an expectation of a 25 basis point cut. So we are actually we are at the moment at 4.25%. And the forecast is at 4%. So that basically means a 25 basis point cut. I did a video today actually talking about that. A short video on YouTube, talking exactly about what to expect when a central bank cuts interest rates, or what to expect when a central bank hikes interest rate. And it's pretty interesting because it will depend a lot into what will be happening, what the market is pricing next. It's not only that only release, you need to look at the whole figure, the whole context. Remember, trading is about context. It's not about the exactly price, the Fibonacci level, the exactly exponential moving average. Like, it's not about this, okay? So that being said, what we can expect is, of course, a 25 base points cut. That is highly what the market is expecting. Now, just briefly going over that, I want to let everyone know that I will be posting a video as soon as that news come out. So yes, I will be recording a video tonight around 9:05, 9:10 p.m. It's going to be a very short video, like a 2-minute video, or 70 seconds, 90 seconds, or a minute and a half to 2 minutes. And on that video, we'll be basically explaining everything to you on what happened with the BOE interest rates decision, and if we should or not trade, and if we do, what side of the position we should trade the pound. Okay, So make sure to be subscribed to the YouTube channel if you're not. And I will be sending the link soon as that the shorts get posted, of course, into the Telegram. I will try to be quickest as possible so we can capture that move with everybody knowing what's going to happen. Okay. Of course, the most important will be the meeting minutes. Sometimes the BOE, whatever the central bank is, they cut interest rates and then they say that that's going to be the last cut. So that cut can be a very hawkish cut because they ended up cutting it, but they are telling that this will be the last cut of the year, or they're trying to indicate that this will be the last cut of the year. So if they are saying that, the market is basically understanding that there will be no other cuts involved into until December, and that is good because then the rates will be maintained higher, and if the rates are maintained higher, the yields are maintaining higher, and if the yields are higher, then my money is getting more money. Basically, it. Okay. Now, if they cut and they make that clear that they will continue to cut until December, then it's the whole different story because the market is already selling the pound because they know that the yields will decrease and they know that the currency will suffer a lot of outflows. So basically people taking money out from UK and put it somewhere else that is going to have a high yield. And the only ones using the pound will be those ones doing willing to do transactions with UK, and that has to be through the pound currency, that is the UK currency. But no one will be actually involved into investing into the pound. So therefore, pound goes weak. Okay. So that's basically both of the ways I look at the forward guidance, and that's the way you should be looking as well because it's the most reliable way. Now, back to scope. 425 to 4% is not huge. Okay, it's only a 25 basis points cut. So if that happens and the market goes to 4%, no surprises. I mean, if that happens, actually happens a 25 basis points cut, and the market stays as predicted. So they don't do anything below 4%. They don't do anything, maintaining at 4.25, or they hike interest rates out of nowhere. So that will be neutral. So there will be no changes. Okay. And can anybody answer this question? Why is that? Or are you guys not aware of that? And I can definitely explain a little bit. So as soon as you guys are thinking on that, I will continue the webinar. So I will send the messages coming through if there is any messages. Now, continue. Okay, 4%. Cool. So now, if they have the meeting minutes, as you can see, it's released on exactly the same time. Sometimes it's a little bit after, sometimes it's on the same time, but for the BOE for today, it's going to be on the same time at 9 p.m. So soon as that 9 p.m. hit, what you should be looking is what they did with the rates and run to the website that we're going to go now. Okay, so you're going to open a new window and you're going to go and BOE, Bank of England. And on here, you're going to see already the first one is the actual Bank of England. And there you have lots and lots of things here that you can explore later. But there's only one thing that we actually want to go. It's a bit of a tricky one to find into the BOE, but it's easy in a sense, okay? I'm not too sure if you search here will find, but the easiest and quickest way to go, it's go into news and publications, and then you go into news and minutes. You click there, and that's where you're going to be, okay? So I will send the link for everybody into the chat. So there you go. You probably got the link now. And this is all of the, I think it's since 1966 year, if I'm not wrong. So you have quite a bit of data here. You don't need to read it like 100 years ago, not even 100 years, but 80 years ago. But anyways, what you have to see is the upcoming one. And you can see that the monetary policy summary and minutes of the monetary policy committee meeting, August. Okay, 7th of August. So if you click on this one, of course it won't have anything there, but leave it here. So soon that 9 p.m., well, for me, hits, it's going to be 12 p.m. into UK time. I will be coming here and doing a refresh button. And then I will know what happened. Okay, you don't need to be in the economic calendar to know what happened with the rates, because it's quicker if you just, as I say, I will send the link on the chat as well for everybody to have that link. This is the link I've sent. So that's where you should be. And soon as that comes in, you just click refresh. Soon as 12 p.m. Well, I don't know what will be your time, but as soon as it's 9 p.m. here in Australia, we'll be clicking into refresh, and then I will have something like this. Okay, so we have something similar to this having updated. But what I want to be here now is, let's have a look into the previous monetary policy committee. Okay, so just so we don't have to go all the way, but let's see, July. When was the last meeting? Let's go into ThinkLogix. In here, the last release on June 19. So June. Oh wow. Okay, so they didn't have a meeting for July. Interesting. So June 19. Okay. Minutes of the meeting of court. Let's go into the second page. Bank rate maintained at 425. That's the one. So that's exactly what you're probably going to get into today, something around that, okay? Or you can just download it here as well, and then you get the PDF. But it's just a fancy way, okay? There's exactly the same content there is on the PDF there's here as well. Now, there's a few things I would like to show you guys. Soon as that hits, we're not going to have time to be able to read all of this. So we can use the technology into a favor, and we can go into ChatGPT, okay? And we can just copy all of these. Soon as that gets out, we just sort of copy like a half of that. We don't need to copy everything because ChatGPT won't be able to read everything. But you can come here and type, what is the forward guidance forward guidance, rate decision, and inflation perspectives for the BOE based on the just released meeting minutes. Meeting minutes statement. Okay, and then you just copy, and you send it, and then you already have it. Okay, so we have here that the rate decision was to held the interest rates at 425. Remember, this is the previous, it's not the one of today. Of course, we don't have. So that already give us, like in the first few lines, like right here, monetary policy to meet 2% inflation. It's meeting today, voted by a majority to maintain bank rate at 425%. So that you can see like very, very quick. Hence why I say sometimes economic calendars, they take a while to refresh. So, because they're taking the data from another economic indicator that are taking from another one. So it's quite of a pain in a sense. So it's just easy to go into the direct I would say source, and I'll send you out the link so you guys got that, right? There's no sorries. Now, that's okay. So we already know. Now, this is the most important ones, these two, okay? Inflation outlook and the forward guidance. So the forward guidance of the Monetary Policy Committee reaffirmed a gradual and cautious approach to withdrawing monetary policy restraints. Policy is not on preset path. Future decisions will remain data dependent. So then we know that they're data dependent. The Monetary Policy Committee emphasized it will keep policy restrictive for sufficiently long to ensure inflation returns sustainable to the 2% target. Risk remains two-sided. The committee continues to monitor indicators of inflation persistence, particularly wage pressures and the balance between supply and demand. Okay, very data dependent. There's nothing actually giving out to us, but I already got what I longed. I already got what I wanted. So the monetary policy emphasized that we'll be policy restrictive for sufficiently long to ensure inflation returns. So we already know, though, that as the market is expecting a 25 basis point, there's no chances of they doing a 50 basis points. So there will be no surprises, okay, for today. That will be at 4.25%, and this is it, all right? At 4%, sorry, and this is it. Now, the inflation outlook is something we have to pay attention. These are the, like as I say, these are the two most important that you need to know, that you need, that is the key takeaway, okay? Why? Because if they change the inflation outlook, this will change as well. The forward guidance will change. They usually don't change the forward guidance, so they like to maintain until some catalyst, like the Fed was maintaining the forward guidance of data dependent and blah 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 for quite to a year, close to a year. Now I'm really interested and I'm really eager to know what the Fed will say into next month, into September. Because as we all know, the NFP came in much, like less than 50% what was expected, close to 50% of what was expected. And the interesting thing is, if a central bank changes the forward guidance, then it shows us that, yes, they're literally in the path of, hiking, or in the path of maintaining rates for longer, or in the path of cutting, okay? So that being said, now the inflation outlook is really important. It's really key. So the inflation rose to, CPI inflation rose to 3.4% in May, up from 2.6% in March, largely due to regulated and energy prices. Inflation is expected to stay near current levels for the rest of 2025 before falling towards the 2% target in 2026. Wage growth is moderating and the labor market is loosening, sign that the domestic inflationary pressures is easing. Market participants still see inflation returning to 2% over a 3-year horizon, with expectations for 50 basis points in rate cuts priced in for 2025. Now, why the inflation part is so important? Because we already know what they predicted for the inflation in the coming months. So they predicted that the coming months will be current levels until December. Okay. And then after that, the inflation will be falling towards the 2% target in 2026. So there's actually another 5-6 months that we won't see much changes into the inflation. So around the levels of 2.4%. Okay. So, and we know what was the effect, what caused the inflation to rise from 2.6% in March to 3.4% in May. And that was because of energy prices, okay? Now, that being said, if they change that, this will be pretty bad. If they change for less, it will be pretty bad for the pound. If they change for more, it will be pretty good for the pound. If they maintain the same, no big changes, okay? Now, one of the other things I want to mention is that there is a really unique thing that makes the Bank of England pardon me. there is a really unique thing that makes the Bank of England quite unique, and that is that they have 8 people voting. Sorry, 9 people voting. Okay. So if we have, for instance, 4 votes saying maintain rates as it is, so no cut, and 5 votes saying cut, there was only literally one person that was saying let's cut. So that's okay. That's a little bit of a tricky situation. Okay. So always remember that the majority will always be actual, has to be majority. It can't be like 1 or 2 persons. It has to be like maybe double of what the other ones are. Okay. Cool. Any questions? Just drink some water. No questions? Okay. Moving on. Now, what to expect, you already know. And what's with that in mind, so we already know what could possibly happen. Should we long the pound? Should we short the pound? Well, let's have a look at the trade, first of all, that we are holding on the pound since yesterday. Okay, so we had pound dollar here. And let's go for 15 minutes. Perfect. So this is the trade we are holding on the pound since yesterday. And I've called this trade live onto the webinar. So for those who are not going to the webinar, you're losing that content. Okay. Now, we are over 90 pips, I'm pretty sure, into profit. Yeah, we're very close. We're 89 actually. 89 pips into profit. So it's okay. And we are pretty much halfway, a little bit over 50 to 60% of the trade. So if you did took this trade, what I would like to do at the moment is I would close 60 to 70% of the position, just because we are going to face an extreme event today. I would like to close at least like more than half. So let's say 60% above on that, and then I could actually move my stop losses to break even and then just wait, because we are actually very well positioned. So let's say we are 89 pips away from the entry point. No spreads will take us out. No swaps will take us out. Nothing will be able to take us out if all trades are into the stop loss into break even. So that's the point, okay, of moving the stop losses to break even. Now, what else? Okay, next point is if that comes into all side, the target will be hit pretty quickly. Okay, so we're trading at the moment at 33,730, and the target is at 34 tree. So it's quite quick to get out into profits if the market actually becomes bullish. Okay, in my opinion, it will be quite bullish for the pound. So we just have to wait and see how this will go. But being very honest with everybody, I guess that the easiest way to trade is, if you've not been inside of the position, it's really hard, okay, at the moment, because the market is basically it's a nowhere land, man. Meaning that we really don't have any places to like back up or wait for pullback or something. If that happens to be positive, and here are the three things, okay? So you wait for the release and you refresh the page that I've sent the last link on the comments. You refresh that. The page will be full of the transcripts. Then you know what's going to happen. You get that. You put into the chat GPT, put the prompt I just gave it for everybody here, and then he will come up again with the inflation and the forward guidance and the rate decision. The rate decision most likely will be a 25 basis points cut, as we were widely expecting. But remember, who was the majority? Is the majority actual majority, or is the majority one person? Okay, just be careful with that. Second point is, what's the forward guidance? Is they looking to continue to cut? Are they looking to maintain the rates as same? So, just barely change. And last but not least, what is the inflation expectations? Is the inflation expectations change? Are they changing for higher? Are they changing for lower? It's simple. It's literally very simple. So this is pretty much everything you should be looking to do tonight. Now, if inflation forecast keeps, if they keep saying that the forecast of the inflation will continue to be strong and they have to maintain the rates higher for longer. Also, if the forward guidance is still data dependent, most likely we're going to have a strong pound. Okay, so looking to long, as we just see here, we've just broke the the highs over here. Okay, so looking to pullbacks around the levels of 133,600 would be a good way to long. I wouldn't say it's the best one, but you can possibly long somewhere around here and have the take profit again at 1.3433. Okay, so that gives you a 74 pips take profit to an 18 pips stop loss. So that's basically 4 times your stop loss. So if you put $10 into your stop loss, you're probably going to get $40 in profits. Okay, if you don't get swapped or if the spreads are too high or anything like that. Now, does anybody have any questions? Because I've covered everything. As I say, it could be a little bit more quicker today because we're just focusing on that. And as previously, we didn't had anything happening to the market. Now, for those who are waiting for the next position, this is the next position we had. It's very close. It's very close to 50% already. And we are above, how much is that? We are both 25 pips. So in general, we are already at 100 pips, take 100 pips profit. So from last week, remember we did 240 pips. This week, we're already 100 pips. I mean, come on. This is pretty decent. This is pretty good. Okay, cool. I would just maintain this trade here. I wouldn't close him. See if that actually have any effect into the New Zealand, but just drag stop losses and close 50% of the position and drag stop losses to break even. Okay. Any questions? You guys are too silent today. I don't like that. No questions? Okay. Look, I think I could cover everything. Let me just go through everything again. So we had a look into the Bank of England rate decision possibilities, and what I'm expecting is actual as a forecasted, so a 25 base points cut that will bring the rates from 425 to 4, and we'll also we need to understand who are the majority. Is if the majority is only one person, then it's not actually the majority. But if the majority actually voted to cut, then that's positive for the pound. If the inflation has been maintained the same, if the CPI is maintained the same, most likely what we're going to get is a continuation of that move up. Okay, so no changes on the CPI to lower, and based on that, if we shall long or short the pound, if you are already into the trade, I would be looking to close 60 to 70% of the trade. Put the stop losses into the break even because, as I've mentioned, it's quite of a decent move that we had from yesterday to today. So the expectations are continuation up. All right. And if you are not into the trade, I would wait for the release, get the release down, and then looking to do that. Okay. Can I see the outcome of the other trades? Can the New Zealand dollar positions be affected by the pound news later today? Maybe it could. maybe it could be affected. Yes, we're not too sure how still. I got in late. Can I see the outcome of the other trades? So yesterday we only got two trades. So the GBPUSD and the New Zealand dollar. The GBPUSD you just saw. The New Zealand against the US dollar is this one. It's a 25 pips in profit. And the other trade that we got was Aussie against the US dollar. But that trade didn't got triggered because, as I say, I was waiting for the price to pull back down here at the 50% and then going up. Okay. So that didn't happen, and that's completely fine, but that was one of our good trades as well. And then the other one was euro dollar long, but we ended up euro dollar short, sorry, but we ended up not entering that position because that didn't make any sense. As I say, we were long already on the pound, so we were short in the US dollar. We were long again on the New Zealand against the US dollar, so we were short in the US dollar. So there was no sense for us to long US dollar here and short euro. Okay, so short euro dollar was basically shorting euro and buying the US dollar. That's exactly the opposite what the whole pop of the thing was about. Cool. And that was the recap of the trades from yesterday. So that's already over 100 pips in profit for everything. Yes, DXY is back in weakness. Okay, cool guys. Thank you so much. Hope everyone have a good weekend ahead. We'll be back next week on Tuesday. I won't be in the office tomorrow. And yeah, see you guys next week. Cheers. Bye-bye.